Hello, everyone. I'm Matt Clark, research analyst with Money and Markets here with your with this week's Stock Power podcast. Now, today's Power Stock operates those welcome sites on a long journey. It scores a 94 on our Stock Power rating system. Now, before that, I do want to let you know that if you have a question about a stock or the market or the economy that you'd like Adam, Charles, or myself to address in any of our upcoming videos, you can send us that question to feedback@moneyandmarkets.com. We'll put that right down below. And if we use your question in an upcoming video, we're going to hook you up with some very cool Money and Markets gear. We've got hats, t-shirts, sweatshirts, all sorts of great stuff. We will hook you up for submitting a question that we use in an upcoming video. Now, make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, adaptable investment information, all to help you make profits in your portfolio in any market condition. Up, down, neutral, doesn't matter. We are on the lookout for profitable opportunities in any market condition. And on our site, on moneymarkets.com, you can check out that stock power rating system. We rate thousands of stocks on 6 fundamental and technical metrics. You can create your own watch list. You can track your stock performance, and you can get our in-depth analysis on the site all for free. Now let's get after it. 23 hours and 27 minutes. Just want you to keep that in mind. 23 hours and 27 minutes, 30 minutes short of a full day. That's how long it takes to drive from my home here in South Florida to where my family used to live in Kansas. And when we first moved to the Sunshine State, my family and I would make that trip every year, and we would drive it, not fly it, drive it. To say it was exhausting would be a massive understatement. It was just painful. And along the way, we'd have to take, several stops, whether it be for gas or for food, or even just to get out of the car and stretch our legs, because 24 hours in a car is a long time without a break. In today's episode of the Stock Power Podcast, I'm going to share with you a 94 rated power stock that gives weary travelers a break on those long journeys. Now, whether you're driving 3 hours, like is the distance from where I live to Orlando when my wife wants to take a trip to Disney, or whether it's 24 hours, like when we used to drive straight to Kansas, you've got to make pit stops. There's no way around it. You just have to make pit stops. You can stop for food, you can get gas, you stretch your legs, whatever the case is. A lot of times it's just inherent that you have to, or a bathroom break, whatever. You've got to make a pit stop. And this is where gas stations come into the picture. Gas stations come in all shapes and sizes here. We've got neighborhood convenience stores like the ones that are right down the street from my home here, or big, massive truck stops on U.S. highways. Regardless, you're never far from a place to stop. Now, the COVID-19 pandemic kept us all cooped up, as we well know. We couldn't go out anywhere. We couldn't travel, couldn't do anything. We had nowhere to go. And gas stations suffered a 15% drop in revenue in 2020 as a result. Now, by 2024, however, annual revenue for gas stations in the U.S. will surpass pre-pandemic levels, as the chart I'm showing you indicates. In this episode, I'm going to share details on a strong bullish stock that earns a 94 overall rating, and we expect it to beat the broader market by at least 3 times over the next 12 months. Today's stock is Travel Centers of America Incorporated. It trades on the NASDAQ, and its ticker symbol is TA. Now, Travel Centers operates about 276 big gas stations. These are big. These aren't small. These are big. Some of them include truck service facilities, restaurants, gas stations, the whole works, and it can all be in one location. And these are located across the U.S. and even 1 or 2 in Canada. And its truck stops include popular restaurants like IHOP, Subway, Burger King, Taco Bell, Dunkin' Donuts, Starbucks, you name it, it's probably included in a travel center somewhere in the U.S. Now, TA scores a 94 on our proprietary stock power rating system, means we're strong bullish on the stock, and we expect it to beat the broader market by at least 3 times over the next 12 months. Now, after hitting a 52-week low in June, TA has made a strong run-up, and I'm going to tell you more about that in just a bit, but TA is a great value stock. It scores a 99 on that metric, putting it in the top 1% of all stocks we rate on value. The company has a price to earnings ratio right now of 6.8 compared to the other retail industry average of 16.6. So it's more than half, trading at more than half the industry average in price to earnings. Its price to sales ratio is 40 times lower than the industry average. That is huge. And what this tells us is that TA is significantly undervalued compared to its peers. Its growth is also solid with a 1-year annual earnings per share growth rate of around 426.3% and a sales growth rate of 51.4%. TA scores a 97 on growth. So here we have a nice combination of a solid growth stock and a great value stock all in one. And this stock has had a very good summer so far. It hit a 52-week low in the middle of June of 2022. And since then, the stock has had a massive run up, gaining 63.7% off that low. Over the last 12 months, the stock is up 35.9% as of my recording of this, and it's far and away outdistancing itself from its peers, which are averaging a 15.4% loss over the same time. So you've got TA up about 36%, its peers down about 15.4%. Travel Center's revenue picture is even more impressive than that total gas station projection I showed with you earlier. In 2020, TA suffered a 20% drop in its annual revenue. Of course, all gas stations suffer revenue drops, and that's about right in line with the total picture in the US, which the drop was about 15 to 16%. As more Americans got back on the road, though, last year, the company's revenue increased 51.4% to $7.3 billion. Now, this year, TA's total annual revenue is expected to reach $10.9 billion. That's 124% up from its revenue in 2020, and a big increase from just last year. Now, when we travel all the road, we've got to take breaks at some point. It's inherent. That's just what we do. No one can drive 24 hours straight through. You really shouldn't if you can. It's not a good idea. And TA runs some of the largest highway convenience stores in the country, and it gives motorists a ton of options for food and other items. They've got retail stores there. Like I said, plenty of food options, gas, all sorts of great stuff. And they're all at these travel centers that are located across the country on major U.S. highways. So now Adam's stock power rating system drives this podcast, and I'd be remiss if I didn't let you know that he's not done with it yet. He's putting the finishing touches on a new system that turns market pessimism into maximum profits. Now, if you just click on the link above, you're going to find out more about this incredible opportunity. So I definitely encourage you to do that. Now, let's look back at our YouTube poll question from last week. On the heels of last week's Stock Power podcast, we asked viewers if they enjoyed the smart features in their cars. Now, remember, my first car was a 1970s pickup that had no power steering, no power brakes, and no air conditioning. And I drove the snot out of it. I drove that thing everywhere I could. I was just happy to be able to drive, and I drove it everywhere. I didn't care that it didn't have air conditioning. Even when it was 100 and some degrees in Kansas in the summer, I drove it. I didn't care. And it was a toss-up in terms of your responses. I was kind of interested by this. 31% of those who voted said they love their features and would never go back to an older model that didn't have them. Another 31% said they actually don't, because it just creates more things that could possibly break in a car. That's valid. It's a lot of electronics there, and if one goes down, typically they all go down. 18% said they do like the features. They especially like those safety features, like when you can see the blind spot indicators in your side view mirrors, indicates when someone's in your blind spot, things like that, automatic braking, all those types of things. Those are good features, and I agree. I think those are great safety features to have. 20%, however, said that the new smart features were just too much to learn, and I understand that too, because it can be a lot. It can be kind of overwhelming when you first get a car, and it's got all these bells and whistles, and you're trying to figure out what they all are, and it takes time to learn what they all are. Now, my current vehicle doesn't have a ton of smart features. It's got enough, but not a ton. And I do get use out of the ones I have, and I really do enjoy them. But it's not, it's not fully equipped. It's equipped just enough to be dangerous, I guess it would be the right way to put it. Now, thanks to everyone who took part in our weekly poll. You can vote in our weekly poll anytime on our YouTube page. Just go into the community tab, and you can find that poll right at the very top. If you have a question about a particular stock or the sector that you'd like me, Adam, or Charles to look at in any of our upcoming videos, email us. Feedback@moneymarkets.com is the email address. We love to get your questions and answer those anytime we can. If we use your question in any of our upcoming videos, we're going to hook you up with some free Money Markets gear. We've got hats, t-shirts, sweatshirts, all sorts of good stuff. We will hook you up for submitting that question and us using it in an upcoming video. Also, head over to moneymarkets.com and sign up for our free daily e-letter. We give you safe, sound, smart, simple, adaptable, profitable investment information for your portfolio. And while you're there, check out that proprietary stock power rating system. You can use the metrics to get the ratings of thousands of stocks. Go to the website, and in the top right-hand corner of the homepage, you'll see a search bar. Just type in any ticker or company name in the right-hand corner there, and you'll be able to see the rating of the stock. You'll get fundamental data. You'll get a stock chart. You can add stocks to your watch list, and you can track performance all there at moneymarkets.com, and you can do all that for free. Now, that's all for me this week. I definitely appreciate everyone who listens to our podcast each and every week. We do it because we really just enjoy it all the way around. I love doing these. It's a lot of fun for me. But if you have a question, anything like that, email us, feedback@moneyandmarkets.com. Until next time, this is Money Markets research analyst and host of the Stock Power Podcast, Matt Clark, wishing everyone safe trading.